A beautiful house, a big car and vacations abroad. The middle-class Indian's dream is being pushed further and further away after the RBI raised its key lending rates by 50 basis points, leading banks to have hiked their interest rates, and the EMIs on their home loans have jumped up for the third time this year, the second time in just 1 month.
When Nimish Mishra bought his dream house in 2005, he thought his income would grow fast enough for him to comfortably pay off the 20-year-old loan. But 3 years and about half a dozen interest rates hikes later, he's not quite sure. The interest rate on his loan has jumped up from 9 to almost 12%, while till a few months back, he managed to save up to 10% of his salary. Now, he makes no savings. He dreads another hike.
That we have to, at the end, in the worst situation, we have to be able to compromise on our electricity bills, which we find it is difficult. We may not use the fridge or the geysers or the washing machines. The food product also, like supermarkets, day by day are getting expensive. So we have to find a way out, go to the small kiranas and buy. So we have to cut corners at the end of the day in your food as well as your other expenses.
Nimish is not alone. Despite rising incomes and falling property prices, that dream house for most family is turning out to be just that, a dream. The reason? Rising EMIs.
From 2006 to 2008, except for brief 1 or 2 quarters, we have seen a persistent rise in interest rates. And we've seen them climb from somewhere around 9 to 9.5% into double digits today for a home loan.
Interest rates on home loans have been rising consistently since 2007. In fact, in 2004, the floating interest rate on a home loan stood at 7.75%. After the latest hike, this rate has now jumped to 12%.
And that was the time when I was paying an EMI of 16,250 rupees. Now that has gone up to more than 17,600. So it's a lot of money which has been increased, and every month to arrange that, it is a problem.
But even as middle-class India dreads an imminent end to its dreams, the finance minister says there is light at the end of the tunnel.
These interest rates will not remain high forever and forever. We will get out of this trough and we will go back to moderate and normal interest rates, hopefully in about 6 months to a year.
The biggest impact the growing EMIs have had is on the lifestyle of middle-class India. Things like eating out, plans to buying the big plasma, and evenings at the theatre seem more and more difficult to squeeze into the monthly budget. With Rachna Rishi in Lucknow and Veena Ramachandran in Mumbai, Vikram Gopinath, Headlines Today.